Hello, welcome to my channel today. This is a King's Tutor. The first time of joining us. Thank you for clicking to this. Ensure you like. Please comment on this video and also share to your classmates. Okay. Today we want to see departmental accounts. Though we have solved a question relating to this before, but have not seen the introduction and the format. Okay. So that is what we aim at doing today. Okay. Now, if it's the first time of joining us, ensure you click on the subscribe button, you like this video. Okay. Now, we want to see what is departmental account. Now, what is departmental account? Now, departmental account can be seen as the account that is prepared on behalf of a separate department in an organization to ensure that the profitable and non-profitable departments are being reviewed. Okay. Now, for instance, if we have an industry or a company that deals with different products, but under the same roof. Okay, so they deal in different products in order to check the profitability of each of the department. They have to prepare what we call departmental accounts. Okay, now it's the same process as a trading profit or loss account, but this one will be in columnar form. That is for each department. They will have to prepare each for each department. Now the essence is this. So if the whole department is being prepared under one heading, okay, it will be difficult to see the department that is not profitable. Okay, and it will also be difficult to detect fraud. Okay, so in that situation now, departmental account is employed to ensure that each department will have to prepare their own final accounts. Okay, they have to prepare their own final account. Why? So that they are going to check the profitability of each department and also to reward the proprietor in charge of each department. Okay, because if it is not done like that, it will be difficult to detect the proprietor in which that have the profitable department, to reward them so that they can do more, and also to check the unprofitable department in order to either shut it down or close it for the moment. Okay, so departmental account is prepared to give separate accounting procedure to each department under a business setting. Okay, so when this arises in something like this, now most time you might want to ask, how would they do in terms of overhead, in terms of their expenses that is incurred by them generally? For instance, now, if they have electricity or their rent in this situation, each department can't pay rent. Okay, what they will have to do is to apportion, or if they have electricity is covering all departments. And how would they pay for it? They have to apportion. Now it takes me to what I call apportionment of expenses. That's what we call apportionment of expenses. And there's what we call allocation of expenses. Now, what is apportionment? Now, apportionment of expenses is a fair share of expenses to a cost center based on the benefits they have gotten from that cost center. Okay, so in terms of departmental account, there are situations, there are expenses that needs to be apportioned. Okay, due to the fact that it is the benefit accrues to all departments, so they have to get a fair share of these expenses to bring it together so that they can pay for it. Okay, for instance, now if this is departments A, B, C, D, E, F, G, and H, for instance, now the electricity, like the lighting, the power supply, will have to cover for all, both the fueling. Now, in this situation, now you can't say, okay, H pay for everything or A pay for everything. No, since it is enjoyed by all of them, it has to be apportioned. Okay, it has to be shared based on either ratio, or they have to share based on how it is being used, on how they benefit from it. Okay, and also in terms of rent, rent. If this plaza is not owned by them, for instance, this one cannot say, okay, I'll pay the rent for everything. No, they have to also apportion the rent so that each will get a fair share of it. Okay, so apportionment is what? A fair share, whereby you divide it based on different method. Okay, we have different method of what? Apportionment. We have what we call the first one, the turnover basis. Turnover basis. Now this is based on the number of goods sold. Okay, number of sales made, and we also have what we call the floor space basis. Now the floor space basis is based on the area that is enjoined by the department, the area covered by the department. Okay, we also have what we call the number of articles sold basis, and we also have what we call the direct analysis basis. Now these are different bases whereby we can apportion the expenses. Okay, whereby we can apportion the expenses. Now also, apart from apportioning based on fair share, we also have allocation of expenses. Now the allocation of expenses is designating that expenses to that cost center based on the fact that all benefit what accrues only by that what department. Okay, allocating that expenses to that, designating it only to that department based on the fact that the benefit was accrued only by that department. For instance, now, if we have carriage inward that was enjoyed by E alone, so it cannot be shared by other departments because they brought goods to E. That's carriage what inwards. It's an expenses that were designated for only E. So it is allocation or is allocated to that E. So that's the difference between apportionment. Apportionment is when all departments enjoy from the benefit, okay, of that expenses. So they have to what? Get a fair share that is to be distributed to them. Why allocation is that the department solely enjoy the benefit of that with expenses and is to be paid by that department. Okay. So apart from that, we also have what we call interdepartmental transfer. Interdepartmental transfer. Now, interdepartmental transfer refers to the transfer from one department to another. Now, most times, some department might have excess of goods, while some might have less. So, most time, instead of going to purchase, whereby other department of that organization have same goods, we have to just transfer from that department to another. So in accounting entries, when you're doing with that, what you have to do is just less from the departments they are transferring from and add it to the department that is receiving it. That's just it. Okay, so that is the departmental account. Now, before we see the format, now in terms of the apportionment, before you apportion based on what is asked in the question, because it will give you the basis for apportioning. Okay, they will give you the basis for sharing it if it's on sales or on purchases, depending. Okay, so before you do that, you should make necessary adjustment in that expenses before you apportion it. For instance, if we have wages in the trial balance, also have accrued wages in additional information, it should be adjusted first before you apportion. Okay, we have treated adjustment. You can check in the link, the description in this video, or check in my channel. You see adjustment video. Okay, so ensure you watch that to enlighten yourself. Okay, so ensure that you make adjustment of all expenses. Adjust it before you apportion, before you share. You should adjust it to get the current value of that expenses before it is apportioned. Okay, so be that as it may, now let's see the format of departmental trading profit or loss account. Now we have objective and characteristics, but I don't want to go into that. Let's see the format of departmental trading profit or loss account. Now, like we said before, the trading profit or loss account, the departmental trading profit or loss account still looks like that of a sole proprietor. We have treated that before, and also the balance sheet. But the only difference is that this one has column. So it is presented in columnar form, okay, and also have a total, okay. But for the balance sheet, it doesn't have a column, okay. So let's prepare, let's say, the format of departmental trading profit or loss account. So we are going to prepare this depending on how many columns, on how many departments, okay. So we're going to have this for department A, department B. Now there's a column we call total. Total is the summation of the two departments. Okay, most time it is not mandatory you put the total, or if it is asked in a question, you should do that. Okay, total also help us to know if what we are doing is correct. So this is the particulars. Okay, that is the debit side, and this is the credit side. Okay, and this also the particulars. Now from this, now the same way we'll start with our trading profit or loss account. The opening stock for department A, department B, then the total is a summation of the two. Okay, the next one, if we have add purchases, department A, department B, the total. So if we add, we have this, this, and this. And the next one, if there's carriage inward, you add carriage inward. Okay. If there is return outward, you less. Okay. So say less return outward. Okay. Now at this point in time now is our interdepartmental transfer. Interdepartmental transfer. Now they are going to state in the question which department is transferring to which. So the department that is transferring to another, you less it from it and you add it to the one that is transferring from. For instance, if they say interdepartmental transfer, transferring from A to B. So A, you will less the value of that goods and add it to B. Okay, there will be nothing in the total since it involves transaction between the two departments. Okay. So, but if they say transfer from B to A, you less that of B and add it to A. Okay, so this minus this will give us this and add it to this. Okay, this brings here, still gives us the same thing. So the next one, we can less closing stock. If we less closing stock, we'll have our cost of goods sold. Now this part here, we can have our sales. Now you can less return inwards. So if we less return inwards, we'll have a value here, which is our net sales. So this minus this, remember this is cost of goods sold. So the net sales minus cost of goods sold will give us the gross profit carried down. Okay, so give us a gross profit. So this is the total. The same thing goes here, and this is the total. Okay, now from that, now remember our gross profit, it is brought down here. So we have gross profit brought down. Now expenses will have to stay here. Now expenses like rent and rates. Now after it has been apportioned, okay, because most time they'll give you when it has not been apportioned, so it will come with a total figure. So after it has been apportioned, share to different departments. So you write that for Department A, Department B, then the total summation of the Department A and B. Then you go to another expenses, either electricity, you do same. Then wages and salary, you do same, depending. So all expenses comes here. Now also other income comes here. We can also have discount received. Okay, it comes here. So when you add up, if our income is greater than the expenses, so we'll now have a net profit. Okay, so you have a net profit that will be here, such that when you add together, it will give us this. Now listen, now most time you will notice in some question that a department A might have a net profit, while Department B might have a net loss. So it is not a must that both of them will have profit. No, most time Department A might have profits, while Department B will have loss. Of course, we know when there is profit is when the income is more than the expenses, and when there's loss, when the expenses is more than the income for that department. Okay, so that is the format for the departmental trading profit or loss account. Now that of the balance sheet, the same way we have prepared balance sheet, we have done that in our previous video. You can check the final account, you can check it in the description, or check it up here, or check it in my channel. Okay, you'll see where we treated the balance sheet from scratch. Okay, so in that you will see a video. Now in the balance sheet, in terms of departmental account, it is not prepared in column because the assets and liabilities are for the business or the company as a whole, not for the individual departments. Okay, so it is not prepared in the column, it is prepared the normal way. Okay, now let's see a particular question on how to solve this. Just a brief question before we can see a thorough question that have adjustment. Okay, now let's see that. Don't go anywhere. Okay, let's see this question. And the question said, the following was extracted from Kwame Enterprises for the year ended 31st December 1994. And the questions are: stock, 1st January 94, Department A is 5,000. Same stock, 1st January 94. Remember, once you see first, you know it is opening. Department B, 4,000. Purchases, Department A, 236,000. Department B, 164,000. Sales, Department A, 300,000. Department B, 200,000. And rent and rates, 1,800. Office expenses, 1,200. Insurance, 1,000. Repairs to premises, 2,900. Stock at 31st December 1994. Department A, 6,000. Stock at 1st December 94. Department B, 3,000. Now they said additional information. All common expenses should be apportioned in the ratio of sales. Now they are saying apportion it in terms of sales. I'll show you how to do that. Now they're saying required, prepare a departmental trading profit or loss account. Okay, very important. Now let's start. Now the first thing you should do whenever you want to prepare this, I've said it before, go to the adjustment. Do the adjustment first. In this question, though, we don't have adjustment, but we'll see subsequent one that they said adjustment. Okay, now they are just asking us to apportion. We should apportion before you begin. So they said all common expenses should apportion in ratio of sales. Okay, now first you should go, what is the ratio of sales? Look at sales. Let's get the ratio first. Now this is sales, this is solution. Now this is sales. Now this is Department A. Department A is 300,000, while Department B is 200,000. So to get the total, 300 plus 200,000 is 500,000. So that's the total. So we have gotten this first. Now I'll show you what to do with it. Now they said let's get in the ratio of sales the expenses. Now the first expenses here is rent and rate. The first expense we have here, rent and rate. Look at it, wasn't what apportioned to a department. We are going to do that because they gave us a command. So we'll say rent and rate. Rent and rate. So remember, rent and rate, the total is 1/8. So we're going to divide for Department A Now look at Department A. Since they said in terms of sales, Department A will now be for 300,000 sales. 300,000 divided by the total for the two departments, 500,000, times the amount for rent and rates. Look at the amount for rent and rates, 1,800 over 1. Okay, so once you do that, 300,000 divided by that, using my calculator, it will give me 1080. That's Department A. Now you do the same for Department B. Now Department B will be, now Department B is 200,000, so it will now be 200,000 divided by 500,000 times the amount for rent and rates, which is what? 18 over 1. So with my calculator, if you do that, it will give me 720. So whenever you have done for a portion with the department, when you add the result you have, it should give you what was the total. Okay, if it doesn't give you, then what you did was wrong. So we now know that for Department A, look at what we post there. For Department B, look at what we write there. Okay, now that's the first one. The next one is office expenses. Now we'll do office expenses. Department A. Department A will now be 300,000 over 500,000 times office expenses is 12. That's 1,200 over 1. So 300 divided by 500,000 will give us, times 12 will give us 720 with my calculator. Why for Department B, it is 200,000 divided by 500,000 times that same 12. It will give us 480. Okay, that's that. The next one is insurance. Insurance. Department A, same thing. We have 300,000 over 500,000 times, what's the amount for insurance? 1,000. 1,000 over 1. So what do we have for insurance? My calculator will have 600. Then for Department B equals 200,000 over 500,000 times 1,000 over 1. For Department B, it will give us 400. That's for insurance. Now, the last one, we'll have the repairs to premises. So we'll have repairs. So repairs, Department A is 300,000 over 500,000 times, what's the amount for repairs? 29 over 1. So with my calculator, it will give me 1740. Then for Department B, you do the same, 200,000 over 500,000 times 29 over 1. So if you do that, it will give me 1,160. So we have apportioned it as regards sales. Okay, so when we start preparing the departmental account, this is what we'll post for Department A, Department B, Department A, Department B, Department A, like that. Okay, so you're going to write it down so that if I have to clean this, you have to write it down so you know what we are posting. For rent and rate, Department A, look at the figure. Department B, office expense, Department A, Department B, insurance, Department A, Department B, repairs, Department A, Department B. Okay, now let's prepare the account in proper. They ask us to prepare. Okay, so it will be Kwame Enterprises. So we have departmental trading profit or loss account for the year ended 31st December 1994. Okay, so I will just do for the two departments without total. Okay. Okay, is the particulars. Is Department A, Department B. Is Department A, Department B, and this is the particulars. This is credit, and this is debit. So we're going to start the first one, opening stock. Opening stock. Department A, they said it's 5,000. Department B, they said it's 4,000 Ghana cedis. Okay. The next one, you add purchases. Department A is 236,000. Department B is 164,000. So we'll add it together. We'll be having 241,000, and the next one is 168,000. Now I check if there's carriage inward. If there is none, next thing is to let's have closing stock. So let's closing stock. Now look at our closing stock here. For Department A is 6,000. And Department B is 3,000. So this minus this will give us, using my calculator, this is 235,000. And this is giving us 165,000. So at the credit side here would be our sales. We have sales, Department A 300,000. 300,000, and Department B 200,000. Okay, is there any returning word? No. So my sales less cost of goods sold. Remember, this is cost of goods sold. Sales less cost of goods sold will give me my gross profit carried down. So the gross profit carried down. So this minus this will give me 65,000. And 200,000 minus 165 will give me 35,000. So when you add them together, this is giving me 300,000, and this is giving me 200,000. So this is the total here, 300,000, and this is 200,000. Okay. Now the next one is the gross profit is not brought down here. So have gross profit brought down. Now this is 65,000. And this is 35,000. Okay. Now all the expenses, like we said, will come here. The first one is rent and rate. Remember, we did the apportionment. So we now have rent and rate. For Department A, will now be 1080 and 720. Actually, to write it down, the next one, office expenses. Office expenses. For Department A is 720, and this is 480. The next one, insurance. Insurance for Department A 600 and Department B 400. The next one, repairs. to premises, which is total is 29. We did apportionment for Department A 1,740 and Department B 1,160. Okay, so when you add the expenses, is also still less than the profit. So we have a net profit here. Okay, so the net profit so this is still giving us 65,000 and this is giving us 35,000. So when you add all this and deduct it from 65,000, the net profit it will give us is 60,860. Such that when you add, you have 65,000. And the next one, 35,000. When you deduct this from that, you have 32,240. So that when you add, you have 35,000. Now wait, let me tell you something. Now this is how to prepare this question in terms of no adjustment. This is how we prepare the departmental trading profit of this account. Now, but watch, don't assume it is simple, though it is simple, but don't just assume. Wait and watch the one that have adjustment in which we have treated before. Check in my description, you see it, or check here now. Click in this video to watch it full video. Click here now, you'll see the full video that comprises of the one that have adjustment, everything there. Check it and watch there. Okay, ensure you like, comment and share this video. Thank you very much.